Why is Volkswagen stock down so much if their profit has almost doubled? VW is down nearly 30.27% in the last 5 years. Despite it nearly doubling its operating profit from 2018 to 2022. Am I looking at it the wrong way? Does this have to do with the German economy? Is there something I've missed? Not enough AI in their press conferences. Do you think VW will have more or less profit in the coming years? Chinese cars growing, interest rates going up, slow electrification than expected in EU, more American and Korean and Chinese competition. More fundamentally and generally, stocks aren't priced on past performance but on expectations of future growth or expectations of people's expectations of future growth. The car supercycle has ended. Expect more downturn. Because they have single-digit margins and negative 12.8% YoY earnings growth. They're going to invest €180 billion in the coming years. It's not clear to me yet where they'll get the money from. These huge investments per definition lead to massive inefficiencies. I'm curious whether they can maintain their dividends. I expect not. I've also heard that their efforts in their semi-self-drive software are not that successful yet. My expectations are that they'll at some point be forced to lease Tesla's software. So yes, it looks undervalued. But I think it's for a good reason. High costs and debts dragging profit on the production of an easily substituted manufactured product that can be made by dozens of other manufacturers without those drags. If you want a serious answer, their debt is astronomical. Leverage, cost of financing, massive overhead, questionable EV transition. It's priced for the future of their product line. Most people don't understand how fast the car market is changing. German manufacturers are also in, frankly, deep shit due to their ongoing energy crisis. Their pivot to electrification has been mediocre. Their user interface in the cars have been mediocre with too much touchscreens. Their cars are becoming less popular in China as China's EV market has been growing at astronomical rates. They face so much structural inefficiencies that they would be unlikely to be able to compete with Tesla or Toyota. They are losing market share and 2 recessions away from being taken out. The company appears to be in shambles when it comes to electrification. They announced a new platform and plants, then fired the CEO and cancelled those plans. Now, they're doubling down on their old facilities. Inventories are rising, and they can't make a competitive BEV. They did buy a Chinese EV company to help them out. But how much would you rely on a Chinese company as a shareholder? I mean, because they are expected to get wrecked by high interest payments due to 200 billion in debts and Chinese Tesla competition, which are pumping out cars at very low prices, where VW will have a very hard time making any money at all. Real answer is because China is killing them. Nearly half of VW's profit comes from China. European vehicles in China has drastically declined due to the increase of mic vehicles such as BYD and Tesla. China has no need for European vehicles anymore, and losing that market pretty much spells a decline for VW. Volkswagen sells almost no electric vehicle in China, the biggest car market of the world, where 1 of 4 new vehicles is an electric car. I'd guess weakness in the economy, estimates of future sales down, combined with massive spending required to convert production to EV, and likely to lose market share to Tesla and maybe some Chinese EV makers. Profits are in the rearview mirror. Valuations are forward-looking. As one executive recently said in a leaked comment, the roof is on fire at Volkswagen. They are heading for bankruptcy. The bigger they are, the harder they fall. I wonder how of that has to do with manipulating the efficiency stats for their diesel engines. I haven't forgotten DEF won't buy a VW. It really doesn't make sense. The only company that's well positioned to make EVs in the near future is Tesla. Just don't fight it. Sentiment is just as real as profit when it comes to stock trading. They tried and failed to manufacture a compelling EV. Also, their corporate structure is whack. Bekwa say they were 5 years too late to the electric party, and other companies are now eating into their home turf sales like Tesla. Stocks have no formal link to the company they represent and their actual financial numbers. Stocks are a piece of paper with the name of a company on it. And we all get together and say, how much do you want for this piece of paper? You can justify the price of the piece of paper in many ways, which I see here in this thread. But it all just depends on what most people are willing to pay for the piece of paper. They need to lie more like Elon and maybe go to Venus like Elmo will one day, lol. Terrible broken software. Their products suck and their mechanics suck more. No return customers. 100 of profits come from making people replace window regulators every year. Emissions scandal. Am I looking at it the wrong way? Does this have to do with the German economy? Is there something I've missed? Stocks only go up when people want them. There is probably a lack of trust from investors because of the no emissions fraud with TDI. And they are still likely paying off billions in fines. Why? It's a shit car with horrible reliability. Shit cars for shit people. Company literally founded by Hitler. You do the math. German industry, including automotive, is heavily challenged by the ongoing energy crisis. While the limited supply of cars due to supply chain disruptions boosted car prices by a wide margin, the supply is coming back, while the lack of access to cheap Russian gas is not. Also, due to the wage pressure, the cost of producing cars in Germany is becoming increasingly expensive, while cheap cars from cheap labor countries like China are flooding the market. Also, Volkswagen does not seem to have that great strategy for taking market share in the electric car market. So there's that. It's a complex company, difficult to analyze. Mostly the stock is affected by Chinese competition in the EV field and other uncertainties related to future EV sales. The whole sector had to invest massively to transition to EVs, which means debt. On the other hand, customers are not yet convinced about EVs, mostly due to patchy infrastructure. Combined with higher interest rates, the future looks uncertain and investors prefer other sectors like banking. There was a recent discussion that Volkswagen's 75% shareholding in Porsche AGP 911 is greater than its own market cap, so it's undervalued in that sense. They came out with a great EV's been driving a few of them for 8 years now but never capitalized on the lead. Frustrating. It is long established company, so all already added to their price. Market is silly like this. Upcoming trade war will wreck them. Volkswagen is undergoing a digestion phase. They have various brands. They are switching over to electric. This all costs time and money. No, you have not missed anything. Also, there is overhang due to the Dieselgate. I am in VW and am not stepping out. It's never about today, it's about the future. Stocks are about future cash flow, not only profit. Germany has an aging population and is about to crash as an industrial nation from what I've read recently. Their birth rate is slower than Japan and only getting worse. Share prices mostly indicate the narrative, and that certainly does not look well for VW. Don't expect any recovery in the short or long term. Stock valuation is based on future profitability, not current profitability.